Luckily, I had started looking into the land and started the investing. And then I had a full-time director of marketing job here in Phoenix and was given less than 2 hours notice on a phone call, like, hey, marketing's gone. And I'm like, whoa. Alrighty then. Although it was a little tough how it happened, that it was still one of the best things that could have happened because there wasn't a backup. I'm like, you had this incredible thing that's already started.
Yep.
You know it can work. Go in full force.
There are different ways to create revenue, to create profit doing what you do. So walk me through kind of like the investment thesis that you started.
Yeah, I started with the basic template of how to start. The program that I was in wasn't based on the passive income like a lot of the others are. It was, you have to make the best of the challenges that come and just get creative. And creativity is just putting the points together, right? Matching things up. And there's a way to get it done and come out better on the other end.
Before I let you go, Denise, you're not going to be able to leave the vault until you leave the audience with one final investing secret. Take it away.
Okay. This has been the game changer for me.
Welcome to the Investing Secrets Podcast.
Denise, welcome to the vault.
Thank you very much. Very glad to be here.
I'm stoked to have you on here. You have a very unique set of circumstances that led you to where you are today. And you specialize, just for context here, that you specialize in investing in land, right? And specifically, well, let me ask you this, because the land investments that you're making, are these typically raw pieces of land? Is it kind of give us a brief overview of the kind of investments that you make?
Yeah, definitely. Yes, I started in vacant land, very typical to what a lot of other land investors. Heard the podcast, actually heard Mark Podolsky, who you had a great interview with him.
Yeah,
He's one of the OGs in the space. And I got into the investing. I was working a W-2. Always had side businesses, side jobs, and I knew I needed to find something else to get me to retirement and not hourly. I'm like, there's only literally so many hours. We cannot do an hourly thing anymore. So started looking for the what and came across land. Of course, everything seems very simple, right? When you're hearing the sales pitch. In essence, it is compared to a lot of other real estate. But I started with the vacant land and education, definitely jumped into a program, and then just started from there. And it's progressed past vacant land, but that's where it started. And that'll always be, a chunk of my business.
I love it. So, and correct me if I'm wrong, but, what were the circumstances that kind of led to that? Because I have here in my cheat sheet, right, that you were working at W-2 and you kind of hit a turning point, right? And that was the final straw. You were like, I'm not going to do this anymore. I'm going to go all in on the investments.
Yeah, it was kind of necessity. Luckily, I had started looking into the land and starting the investing, and then I had a full-time director of marketing job here in Phoenix, and was given less than 2 hours notice on a phone call, like, hey, marketing's gone. And I'm like, whoa, alrighty then. Although it was a little tough how it happened, that it was still one of the best things that could have happened because there wasn't a backup. I'm like, you had this incredible thing that's already started.
Yep.
You know it can work. Go in full force. And my kids are grown, so I could handle the risk. I did those years, and nobody's, I'm the only one that's going to start if it doesn't work. So I'm good with that.
Yeah. That's classic entrepreneur. Yeah.
Exactly.
If I start. Well, there's always, you'll figure it out.
Exactly.
Yeah. Okay. So obviously we've, like you mentioned, right, we've had other people here on the show that have similar business models, right?
Mm-hmm.
But I do feel like there are different ways to create revenue, to create profit doing what you do. So walk me through kind of your the investment thesis that you started with, right? So I'm going to pick up some raw land. And were there improvements made at all at the beginning, or was this simply like a find undervalued pieces of real estate and sell them at market value?
Yeah, I started with the basic template of how to start. The program that I was in wasn't based on the passive income like a lot of the others are, sell it so much per month. That was unfamiliar to me. I was selling it. I use agents. So we're selling it on the market, and seller financing was not a norm to use. Most agents, they don't know how to write up the contracts. It just wasn't a thing back then. So it was cash flips. And then part of the changes are you have to be able to shift. So about a year in, cash sales stopped. Like economy changed a little bit. Things changed. I'm like, oh no, what are we going to do? Because you just don't know when something like that's coming. So things started to shift to seller financing. So that changed a couple things. There are certain areas and certain price ranges where they tend to be more seller financed. So I'm like, okay, I need to go after those areas. But I'm also bringing in, I need to do something else for the land. So maybe that's bringing in the utilities. Maybe it's, there's something about it that's more attractive. So that was kind of the segue into diversifying my risk.
I see.
What else am I going to do now? So I will add that I will always do land. I love it. There's so many things. Then you start to take that one channel land. It's like, okay, how do you break that down? What else can I do with it? Right?
Sure.
But then equally important is looking at other real estate channels. And like, what if land goes away like that? Well, then I'm in trouble. So dug into multifamily and did a big masterclass on that and built a team. We looked at properties, built the relationships with brokers, looked at that. And then numbers started, economy again, got a little funky. I'm like, so it's not chasing shiny objects, it's diversifying. Now I know so much from multifamily, I can use that, a lot of that information in other places. So, so land started to really change quite a bit. Started buying bigger pieces, doing the splits that a lot of people do because they get kind of bored sometimes, just flipping raw land. And the market got very saturated. There are a lot of teachers out there. So I'm getting calls from sellers and they're like, okay, I have 15 to 20 letters here on my desk. Why you? This must mean that my property is so valuable. Yeah. I don't want your price for it. So we kind of kicked ourselves a little bit. Yeah. But then you just have to shift again.
Right. Well, it is interesting because I do feel like this strategy, given, I don't know how abundant this niche is, right? Like, I'm not sure how many vacant pieces of land there are in the United States, but I figure with all the education there is out there and all the gurus are out there right now that it could quickly become a saturated marketplace, right? If it hasn't already. And so when that happens, right? So obviously that forces profit out of the equation, right? Because you start to see people overpaying or be willing to accept less profit per deal. But then before the program, you and I were chopping it up a little bit, and you had mentioned, manufactured homes. So there are other strategies or other value adds that you're currently leveraging to force more value, right? Into the property. So talk to me about what you're doing with that, because it's an interesting way to force value, and that's that's the name of the game, right? In real estate, always find ways to create more value, right? So,
and I will say that's another thing. I knew nothing about manufactured. I'm like, mobile home park. I just didn't know. Yeah. I work very closely with my real estate agent. She is really my teammate. We will dig into markets and do everything. And she had brought it up in the past, hey, this would be a perfect place for a new manufactured. And I don't know if you've looked at that. They can be arranged from single wides to $500,000 homes to whatever. Like there's this huge range. You can do whatever you want with it. So it's all about the market and the comps. And if it doesn't make sense, it doesn't make sense. You don't want to put a single wide in, a luxury resort somewhere. But we would come across land and maybe it had partial utilities. So we had connected, my agent said, hey, I know this dealer. That sounds bad, but she knows this dealer. And we connected with him, and he was a really good salesman. So long story short, we got into 2 deals with him. We put homes in opposite ends of the state and different functions. Like one was more a second home, nice in the woods, and the other was functional. He was not a good man. And he did a lot of illegal things on the back end. We made it through that, but lesson learned, I ended up cleaning a lot of the messes up. So I would work with the counties, I'd work with the inspectors, whatever. I learned how to work this.
Yeah.
And I'm like, I could do this. I could do this 1,000 times better than this person. So I got my dealer's license in Arizona. And now we can put homes on. We could do subdivides and do spec homes, like Toll Brothers model, right? They can get traditional funding. It just opened up so many doors. Or I could just be the dealer for other land investors who want to value add. So it was, you have to make the best of the challenges that come and just, get creative. And, creativity is just putting the points together, right? Matching things up. And there's a way to get it done and come out better on the other end.
So when you put like a manufactured home on like a vacant piece of land, so let's just like walk through like the framework of all of this, right? So you have a piece of vacant land and you're, just to walk through the strategy real quick, right? Traditionally, you find underpriced land, right? And that you buy it for less than market value. And then you effectively relist it, right? Without too much, like you're not putting too much into it. And then you're attempting to sell it for full market value at that point, right?
Yes.
So, which makes perfect sense to me. Now you're also introducing the equation of manufacturing, home, right? On top of it. So what you're saying is that like all of a sudden now that land then becomes less about like, hey, what's the land worth, but rather like, what is this home worth, right? Compared to other homes based on the square footage, price per square foot, et cetera, in this area. How many, so is that more or less?
Yes. Yeah. We're doing homes far in advance try to get apples to apples as much as possible.
So the question that I had though is like, how many vacant pieces of land are there in like areas where there would be like a lot of comps? Because I would suspect that like a lot of these homes are in more rural areas, right? Or a lot of these pieces of land are in rural areas. I might be wrong, but like it seems logical to me that it would be in the area where like there might be a couple comps in like a 2-mile radius, right?
Yeah. That's a good question. And I can answer it a couple ways. Some we focus on when we're trying to find land, we're going to find infill lots where there's already manufacturing around. Really? Or if we have to scrape one, that's just, it's still in a great neighborhood, but this one was let go. So if we can find a parcel even larger parcel that has a manufactured and then split it, because then we know it has utilities to it.
Gotcha.
Vacant land. So obviously, yes, there's a ton of vacant land out in the middle of nowhere. If it's in a growing area, like we have a lot of areas in Arizona that are just going east, west, south everywhere. And a lot of data companies are coming in. But things are being built there. And it's not too cost inhibitive to put in utilities. It's a lot of due diligence ahead of time. If it's going to cost us, $30,000 just to pull a line down the street for electric, let alone all the other utilities for manufacturing, probably won't make sense. So we have a big checklist of due diligence to see if it's prime or not for that. But yeah, comps are always, they're so important and can be challenging out in the middle of nowhere.
That's a really interesting, see, like you learn something new every day. So what you're looking for essentially is a lot that already has a manufactured, or in a lot of cases, right? The ones that end up making sense are ones that already have manufactured on it. And you're just going to subdivide the land at that point.
That's the easy way. It's hard to find. It's hard to find a large enough piece of land because the land also, vacant land has to be zoned for manufactured to start with. So that takes a lot out of the pool already. Sure. But I know the first installation we did, it was a manufactured that was already scraped. And we had electric. We just had to put the septic and reconnect the water. So it had pieces there that's saving us money.
Okay. Understandable. That's, it's like one of those like tricks of the trade, right? You don't quite know it. Like now that you're saying it, I'm like, that's very logical. Makes a lot of sense. But then, I don't know that I would have necessarily thought about that unless you brought it up. So how would you figure out whether or not, and I'm sure that you like probably not doing these in markets where you're unfamiliar, right? You've probably done some research on the market beforehand. How are you also kind of like making sure that you're abiding by like the rules of like subdivision and like that's even possible, right? Like maybe it already has a manufactured, maybe it's zoned for it, but like you can't subdivide the lot. Are there quick ways for you to figure that out, or like or do you have to call the city and like ask them, or like what is that?
Yeah, there are quick checks that you can do. However, we always call because even if it's on their website, even if we see the zoning, and it's zoned for manufactured, and you can split it into, let's say 4, usually 5 is the max in Arizona, just to be in my million division. Always call and verify. And we've had a lot of crazy things that weren't true on the county websites.
Makes sense. And then can you even really take the person on the phone's like word for it? Because I feel like sometimes they like say stuff that they don't even really like you get one, you get one story and then you kind of call back and then it's a different story and you're like,
conflicting messages here. It depends who answers. So to follow that up, I always get it confirmed in email. Get it in writing. Yeah.
Yep. Smart. Very, very smart. So at this point now, you've done a lot of these transactions, and you kind of mentioned the multifamily thing too. So I'm curious what your thoughts, because you had mentioned diversification at this point. So it sounds like you're at least diversifying your approach, your strategy. You're kind of like using different methods here and like kind of like stacking different value creation methods on top of each other. So that's great. Outside of that, like you're sticking to vacant land, or have you also explored, like after maybe the multifamily thing, have you also looked at other asset classes as well?
Yeah, absolutely. I have. When I was going to veer away from multifamily, I still wanted more passive. And even though we say passive, whatever, property we buy, it still work. So I took a year-long masterclass on storage. I'm like, okay, that's not as hands-on as multifamily, right? It's kind of in between the land and the craziness of multifamily. So that's been itching at me for a long time. And not just self-storage that's kind of hit a bubble, but what excites me is seeing storage with vacant land that I can do something with. I like use those skills and build out the RV spaces. And I was I have a storage unit because I work remote. So I spend a lot of time at my storage unit, and I see the just lines drawn, stuff piled in the spots. I'm like, oh, they are making so much money just from piling stuff there, and it's a pretty interesting model that you can do a lot with. So that's next in line to really commit to once I have partners that we want to work together on that.
Yeah. Question for you, Denise, have you self-funded all of these deals? Do you raise money to do these deals? What does that typically look
I self-fund, let's say 75% of them.
Okay.
When I first started in land, I wasn't coming with a lot of capital. Like I said, my career started very late from raising the kids, not being able to build that retirement account. So I'm not bringing a ton of capital.
Right.
There are specific land funders that they've been in the business. So you partner up with them, you get a split. Let's just say 50-50 for easy numbers. I'm managing the project. They're bringing the money. When we close, we split 50-50 on the profits.
Yeah.
I ended up getting burned a couple times, but it was also one of my most important lessons about reading contracts. Read every single line. So unfortunately, in a few of those deals, and I take accountability for it, there was a limit on how long you had to sell it. So let's say it didn't sell by 8 months. The partner gets the property. So they're on deed. So I don't use that anymore, but a lot of family, friends, and honestly strangers, they're like, what are you doing? We want in on this.
Yeah.
Show them numbers. So those are private, like promissory notes, JV agreements.
Okay.
That's a majority of what I do. I don't have any desire to build a fund per se.
Sure.
Like I don't feel like doing that. That's not my expertise. So I enjoy the JVs. They're all very catered to their goals, my investors' goals. Has to make sense.
I also feel like the check sizes are not like super crazy, right? For what you're doing, right? So it's like it's bite-sized stuff that people can actually, because like there's some deals where it's like there's no way that you could not do like either like a larger syndication or like do a fund, right? But like for these deals, I could totally see that. Now, question for you, right? Like speaking of financing and how you're kind of like acquiring a lot of these deals, like how have you been able to leverage non-traditional creative, right, or non-traditional financing strategies, like seller financing or other types of finance? Like how have you done anything like that? Okay, great. So like I want to hear a little bit more about that.
So I'll give you one example where we purchased a large piece. We split it into 5. We bought it on seller financing, so whatever, 20% down or whatever. And then every time we set up an agreement where every time we sold a piece off, they still had quarterly payments due to them. And when we sold a piece off, it's a release then. We're releasing the property and we have it paid off before, let's say on parcel 3. So they're still getting their quarterlies. They're insured that they're getting paid sooner than they would have. So it's a win-win for them if they're not in a rush. Or sometimes we'll do options, right? We have maybe 90 days to sell it and we could double close or use transactional funding if there's maybe a week in between. Oh gosh, there's just so many ways to do it. And you don't know unless you ask. You assume sellers, it's an automatic no, right? Because it's not the cookie cutter way. But as long as you find out what you're solving for them.
Right. Yeah, no, and that's so true. I think, we've had a lot of people on the show that use non-traditional, financing methods. And most of the time, I mean, when we're talking creative financing, it's typically seller financing, right? Some sort of seller financing. And I would agree with you that a lot of times we make up stories in our heads about like, oh, well, of course the seller wouldn't this, or of course the seller wouldn't accept that, right? Like, of course the seller would never accept zero money down, right? Well,
guess what?
And it's crazy because, and I've heard this story many, many times where it's like the property has been sitting for a year, 2 years, 3 years on the market. And it's because it's overpriced, right? The only one reason that a property doesn't sell after a couple of years is because it's overpriced. Well, a lot of times it's sellers married to an outcome, right? They're married to the sticker price, and they're waiting for the market to come to them. Well, if you come to it's almost like a pride thing at that point. Like if they say, hey, I got, $4 million for a property that's really only worth like 3, right? Well, if I can get it at 4, but with no money down, right? And I have a strategy to make sure that it's cash flowing and we're making good returns and everything on it. Then yeah, it makes sense. So in certain situations, it would make sense, right? So,
and if you can talk directly with the seller and really build that relationship and find out, you ask them, okay, if you could get, how many offers have you had for $4 million, right? Tell me the highest offer you've had, kind of find out. You just find out their whys and talk them back a little bit and bring them down to reality. And, 2 or 3 million is better than 0.
Yeah. Right. Exactly. No, I love that. So, let's see. One of the things that I really haven't really discussed with a lot of other land investors are the tax implications, right? Because these are typically shorter term holds. And so, what tax implications are there for this type of strategy? And then are there any creative solutions to kind of help mitigate or offset some of the tax disadvantages, right, of this type of like quick turnaround investment strategy?
I think they're pretty industry wide. I mean, obviously seller financing, you're just spreading out, right? I use 1031s just like everybody else. That's totally doable.
Even with short-term holds, like if you buy and sell within a year?
Yes.
Really?
It's all about the timing in the 1031. So if that matches up, it can be done. Definitely.
I see.
And I don't know, just with, you can invest in land, self-directed 401ks, depends how your business is set up. So if you can tie that into your business, there's all kinds of tax strategies. And that's been one of my big lessons also is learning, and it came from multifamily and all the other industries. Tax strategy. I mean, those are your tools. You can do so many amazing things, so I don't know if they really answered. I don't think there are any secrets for land. I think it's all kind of the same.
Well, so, and I guess I'm making this up because, with house flips, for example, right? Those are, because of the hold period, there's certain things that would prevent you from qualifying for 1031 exchange, but maybe I'm making that up. Maybe that's not actually true. So perhaps it's
I would talk to your 1031 agent. I don't want to put any false information out there.
Smart. Now, this is a tax advisory show anyways, right?
Disclaimer.
Yeah.
But as a tool, 1031 is definitely doable for to move land and buy land. I'm
curious when it comes to finding deals, and I know that you use direct mail, right?
I used to. Yeah. I don't use it very much anymore.
I'm curious. Okay. So why is that? Just out of curiosity.
A lot of competition and nothing, industry changed and economy changed and results weren't happening. It's expensive. And I became much more targeted on what I wanted and why and the end use.
Sure.
So it didn't make sense to put out, 10,000 pieces to whatever area. So I do very targeted, kind of like sniper markets. I work with my agent and we'll say, this is good for this. This is good for this.
Yeah.
And really the only time I use direct mail is if I'm sending them an actual contracted mail, like a full on, I'm like, I've done due diligence. I want your property. Here's the contract. Here are the deadlines. And at least it gets their attention.
Yeah. Yeah. It's interesting. I think I had some guy on the show. I've made this up. There was someone that I could have sworn that they set like a full offer in the mail to like every like it was the first piece, right? The first piece was like a bona fide, not just like a one pager with like like an LOI,
Right.
it's like a full like PSA, right? Like sign here and we're in contract sort of thing, which I thought was pretty cool.
That's what I do. It's my legal contract that I send a title, and it's about 8 pages long. I don't send them to everybody because, it gets a little pricey if you're sending a bulkier piece. But I didn't get into texting. I kind of passed on that because it takes a lot of manpower to answer those immediately.
Right.
But on and off market deals, once in a while from wholesalers. But if we're developing on it, if we're putting a home on it, we can pay closer to market. So it's a little easier to get some land. And
I'm also curious, because you talked about getting in front of sellers and like kind of like going through that question and answer phase, right? We're trying to get to know them a little bit better. I'm wondering what messaging you found to be effective when you're interfacing with them. Like, are there certain questions or talk tracks that you found to be like fruitful in terms of helping them kind of get on your side, right? So
yeah, yes, we definitely have. I want to say scripts because it's not that hard, but bullet points, and suggestions. But the most important thing is finding some commonality. I don't care what it is. I don't care if it's both of your grandfathers are from the same state or some commonality that connects you just to keep them on the phone a little bit more.
Mm-hmm.
And it's a relationship. People like to do business with people they like.
Yeah.
So I've had people accept my offers and they've said, I had offer for, X number more, but I like you. I'm like, oh, I like you too. So just be that trusted source. And I want to set myself apart from, there are bad actors out there, right? I'll give them my title, agent's phone number, verification. This is legit. We can do this, and just build whatever relationship that is.
Well, I can say, like, so in a past life, I don't think in a past life, I was a realtor out here in the Bay Area. And this is before like the whole letter thing became like frowned upon and all that stuff. But we used to do letters and found, I kind of made it my mission to always find out like as much as I could about the seller, to find like points of commonality between the buyer, right, that I was representing and the seller, to have something to talk about in the letter, and one that sticks out to me is we're walking through the house with one of my clients, and they found like a picture of like the sellers in USC gear. So it was, and then we figured like, okay, they went to USC and everything. So the wife also went to USC. So we made it a huge point. Like every picture in the letter had her in her USC outfit and everything. And the agent calls me and she's like, hey, we have 3 offers that are higher than yours. This is back when the market was like crazy, right? But the seller really wants to sell to they want to sell to a USC alum. So, and I, she's like the highest offer is like, it's like 25K, whatever, something. It wasn't that much higher than ours.
Yeah.
I was like, well, how much do we have to come up? And she's like, 20, right? So we didn't even have to pay the highest price to get the house. They ended up giving us a little bit of like a USC discount, I guess, or something.
Good job.
Yeah, so and so I would agree. Like, people want to work. They'll do business with people that they can relate to, right? That they like. They want to, they want to do business with people that they have things in common. I would agree with that 100%. I would agree with that 100%. Denise, we are, we're coming low on time here, and that being said, before I let you go, like if people want to connect with you online, like where's the best place for them to find you? And of course, all of this will be in the show notes below and in the description as well.
Sure. I'm not really on social media just because I did it my whole life and now I don't want to.
Yeah.
But they can reach me at triumphpropertyllc@gmail.com. That's kind of my incoming one I check. And I'm happy to jump on a phone call with them too. Just reach out. I like to hear what everybody else is going on and try to answer questions if I can.
Love it. Love it. All right, great. So we'll have Denise, we'll have your email in the description below if anyone wants to reach out and chat. But before I let you go, Denise, you're not going to be able to leave the vault until you leave the audience with one final investing secret. Take it away.
Okay. This has been the game changer for me with anything I've done over the last couple of years. And it is a Brandon Turner, I'm sure.
Yeah,
from
Bigger Pockets guy. Yep.
Okay. So he started it was called Better Life Tribe about 2.5 years ago. And it was all based around goals and accountability. And actually 100% of the money went to charity. So it was, he's a good guy. However, so that was based on goals. So we were matched up with what was called pods, and we would have to meet every week. It was kind of new and it didn't really work, but long story short, I'm with 5 people and it's our accountability pod. We meet every single week. So we set like 5-year goals, annual goals, quarterly, weekly.
Oh, wow.
So every Sunday night we are going through those goals and setting our new ones for the next week.
Love that.
And it's a different mindset. You can't just say, oh, I have this to do. It's like, no, I have these 5 things I need to get done. And it really keeps you on point. And to add to that, all of these people are in different industries. So mixing with people in different industries, a combination of that. I mean, the cross industry intel, it applies to all of us. So share that as well. So that's what I got.
I love that. And when I ran my real estate team, 35 agents at one point have the team, and we ran accountability pods like that too. We have agents in different accountability groups, and ultimately, as a leader, right? Like accountability is the highest form of love. So if you want someone on your team, your organization, whether it's an employee or whatever, W-2 or W-2, 1099, whatever it is, you want to hold it accountable, right? But also holding yourself accountable is the highest form of self-love. Right? So yeah, I think that's great. But it's also hard to do. Like, it's really, really hard to do. And that's why having like other people that are kind of sharing in that same accountability with you, and like it helps kind of make sure that you're staying true to yourself, right? And that you're staying true to what
Absolutely.
you said. Yeah.
And it's a safe space where they can call you out. We can challenge each other's questions, and you build up a really strong relationship with people and better yourself at the same time.
100%. I love that. Denise, this has been a lot of fun. It was great getting to know you a little bit, and I wish you nothing but the utmost success moving forward, and curious to see how you develop and kind of grow. This business sounds like you've already pivoted, or not pivoted, but like added some things. So I'm curious to see what else you add in the next couple of years here, and hope you keep it going.
Thank you so much for having me. It's been a pleasure talking with you today. Thanks so much.
Absolutely.